Mark, publicly traded indexes have done very well over the last 2 years, yet there still seems to be a demand for alternatives. Why is that?
Institutions have been active in alternatives for decades at this point. When you look at what an allocation to the private markets bring relative to the public markets, you tend to see higher performance, lower volatility, and less correlation. So when you put those together, it tends to increase the risk-adjusted return of an overall portfolio. Given the structure of the private markets, they have historically stayed in the institutional domain. Recently, we've seen some evolution in structure that have really broadened the aperture and made it more applicable and accessible to individual investors.
Well, after 2022, when both stocks and bonds went down, a lot of people went into alternatives because they weren't marked to market, longer term investments. However, I'm sure there's some still holdouts. What's holding them back? Is it liquidity? What are the biggest challenges when it comes to getting people finally into alternatives?
When you look at how individuals want to access alternatives or access private markets, you need to get at least two things right. You have to have the right content and you have to have the right structure. On the content side, it's in any asset class, it's about investment selection. In private markets, it's about manager selection. You can't just invest with the first manager that hits your inbox. Obviously, you have to be really selective. So spend a lot of time sourcing, build a big top of the funnel, and then be really selective about the investments that you make. Then you have to get the structure right. What do individual investors don't want is a lot of operational complexity, capital calls. There needs to be eligibility considerations. They don't want complicated tax reporting. And so you have to get the right content and delivered in the appropriate vehicle structure. That's what we're doing at Wilshire. We're trying to create an institutional investment experience for individual investors.
And you have the Wilshire Private Asset Fund. Can you tell me about that?
Yeah, so the Wilshire Private Asset Fund is an all-in-one private markets fund that's accessible to individual investors. It was built on the premise of ease of use and really trying to package what we're doing in the institutional channel for individual investors. And so it has the same types of managers, the same access to the institutional quality investments that our institutional clients have, but it's delivered in a very accessible package.
And you're vetting the managers, correct?
We're doing the vetting. So it's the same quality of managers. It's actually the same investments that are going into our institutional products are being shared with this vehicle. Where it's different is how it's being packaged. So it's an all-in-one vehicle, private equity, private credit, private real assets, US, Europe, and Asia, different investment types, vintages, all delivered in one package. And then we think we're using a state-of-the-art vehicle structure to deliver it as well. So low minimums, it's an interval fund, so it's a point and click, ticker-based solution, broad accessibility, reasonable fees, K1, 1099 tax reporting instead of K1, and all the features that make it easier to implement in individual portfolios.
And then finally, which strategies are investors clamoring for the most? Is it crypto? Is it real estate? What do they want when it comes to alternatives right now?
In alternatives at Wilshire, we really take a longer term perspective. And so we're looking more for the secular trends than anything that's more cyclical. And so what we see, a tried and true approach is smaller managers, more specialized managers tend to outperform. The smaller end of markets are typically in a state of capital supply and demand imbalance. They tend to be less efficient, less competitive, better pricing, more of an operational approach to value creation than one that's more financial engineering. And so we lean into that. We embrace complexity in certain parts of our market, complexity that deters the lower cost of capital and where managers are able to find pricing power like in private credit today. And so small, specialized is really where we focus.
All right, well, thanks for coming on and talking about it.
Thanks, appreciate it.